It's time for the inflation report. Is Donald Trump going to be furious this morning? Core PCE is 0.3, unchanged. Personal income from 0.2 is 0.3. That's good. We've got initial jobless claims from 224 down to 218. That's good. We've got good news on the market. Let's see how it's reported. Here we go.
With the breaking news of the morning, we have jobless claims, ECI, employment cost index, and personal income and spending. Let's start with income. Remember, last month we took
There's my defensive going up now.
-0.4%. That was weakest going back to the fall of 21. Rebounding up 0.3, a tenth better than expected, and that would comp to, well, April, we were up 0.7. Now, let's look at personal spending, up 0.3, a tenth light, but a nice reversal before any revisions from the -0.1. Up 0.3 would comp to March when it was also up 0.7. Let's look at real spending, accounting for inflation, up 0.1, exactly as expected. Now let's get to the meat of the matter. PCE, okay, this is month over month, up 0.3 as expected, but that's still a couple of tenths warmer in the rearview mirror, up 0.3. That's the second highest of the year, even though it's the third month, meaning Jan and Feb were both up 0.4. Those are the high readings. This would be in second place, up 0.3. So it does comp to the beginning of the year. So even though it's gone up, we've been higher, but it's reversing a bit of a trend. Now let's look at the year-over-year numbers. 1/10 hotter, both rearview mirror and windshield. That's 2.8. That is the highest reading of the year. It equals March of 24. To find a higher read, you're moving into, yes, the fall of 23 when it was 3%. And if we look at the core month over month on the PCE, up 0.3, exactly as expected, and that would be the warmest since February when we were up 0.5%. And finally, year-over-year core, in my opinion, the most important number, that's 2.8. Also, just like the other year-over-year number, it's a little warmer than expected. 2.8 would be the warmest since February when it was 2.9. Now, let's look at the employment cost index. You're expecting a number, this is the second quarter number, up 0.8, comes in a tenth. Would equal the second quarter of 24 to find a higher number. Here in the first quarter of 24 when it was 1%. Initial jobless claims, 218,000. Now that's a low number. We're expecting a number about 9,000 higher than that. 218,000 follows 217,000. These are awfully well-behaved numbers. And finally, continuing claims, another week above 1.9 million, 1,946,000, all congested. You know, I suspect that some upside pressure was there for some of the slightly hotter PCE numbers, but it also seems to be, to some extent, something to pay attention to, that the market did not really climb aggressively. We're up about a tenth, about 1 basis point in a 10-year at 434, but that's still down almost 3 basis points on the session. So even though these were a little warmer, once again, I always like to look at, there's both the trend direction of inflation, but there's also where we have been. And in every instance of higher than expected PCE, we have had higher numbers recently. Joe, back to you, buddy.
There we go. So let me break that down. The inflation prices, inflation is up. The Fed were right to hold rates, whether you're political or not, whether you like Trump or not, whether you don't or you do, whether you like the Fed. The Fed were right to hold their rates where they were because inflation is going up. What's good, though, the economy is strong. Now, how does this affect the market? Well, you can see we're up today nearly 1%. It's a great day. I'm only in the S&P 500, or 92% in the S&P 500. I've got a small amount of crypto, $17,000. It plays about 7 to 8% of my portfolio at the moment. It needs to be trimmed, and that's down. So if it wasn't for my crypto, I would actually be up over 1% today. Now, why this is important is because last night we had a fantastic blowout performance from Meta and Microsoft, and they don't care about rates being high for longer. Why? Because they earn money on the piles of cash. They do not care, and they in fact boomed when we originally were at the higher rates. It doesn't bother them. It bothers new startup businesses. It bothers people that spend money. It bothers people that trying to borrow money, new mergers and acquisitions, IPOs. But the old guard, the Mag 7, the top 30% of the S&P, they don't care about interest rates. It doesn't really bother them. Their enterprise spending amongst themselves makes no difference. In fact, they make more money. It doesn't matter. So last night I bought on the earnings as we dipped here throughout the FOMC report. I was in my trade. You can see at the top of the screen my Roth IRA trade. That's my Coca-Cola defensive. I haven't been able to sell that yet to buy back in the S&P. So you might say, well, you've missed out. You got it wrong. Yes, I got it wrong. I did. Coca-Cola didn't let me out quick enough, didn't allow me to buy the dip of the S&P 500. But remember, even though I was wrong, I never lose. So I'm still in Coca-Cola. I'm happy to stay there. And with this now, massive amounts of profits being made by Microsoft and Meta, profit will be taken. It will move into Coca-Cola. I will win. But even though I'm currently still waiting on that trade, even if I don't get out soon enough, I will make my money by just simply holding it for 3 weeks and getting the $396 in dividends, which is more than I would have made if I'd stayed in the S&P in the first place. So even though I was wrong and was unable to trade it during the FOMC report, I'm still going to win. But I also took advantage of the dip on my other account, my brokerage account, when I bought that dip during the FOMC report yesterday live on the show, and now have benefited from it here on my main account. So even though I didn't get the timing perfectly on the trade of Coca-Cola, I'm still going to win. This is the benefit of always buying quality stocks. You can't predict the market. You can't time the market. You can hope you get it right, but as long as your strategy is sound, you will win at the end of the day. So inflation is going up. The Fed were right to hold rates. I wanted to see it come down. That would be a stimulus, but they were right. Inflation is still sticky. It's still going up. And the Fed have said they will reduce rates. They would have reduced rates by now if it wasn't for tariffs. Tariffs is still an uncertainty for the Fed. Remember, the Fed is you. The Fed is not the government. You don't want the government to control the world or the country. They make decisions on your behalf. The Fed's job is to protect from inflation. It's to protect you against the government's politics. They are there for the country's money, not the government's money. Trump says, lower the rates, it saves the government money. Yes, it does save the government money, but the government represent the people. They are not the people. The Fed is the people's money. So remember that. It's always important to understand these things. So inflation is up today, but the economy is strong. Employment numbers were good. Jobless claims are good. We've got a good performance in enterprise with Microsoft and Meta. That's good. They're spending money with themselves, which means we've now got the green flag that we're going to get a blowout earnings of NVIDIA because they make their money by the chips they have with NVIDIA. So, NVIDIA's earnings are going to be good. The market is going to go up from here. But we might get some trimming that will go into Coca-Cola, my Roth position, and you can see already happening. So it might happen today. It doesn't matter. If it doesn't, I'll hold it anyway. But that is how you can take advantage of both sides of the argument. Inflation is up, jobs is good, the economy is good. I bought the dip during the FOMC on my other account as I couldn't buy it in my Roth because I was currently in that trade, but we will get profit from that. And if we don't, we just hold for the dividends. Either way, we win. As long as you always buy quality and hold and have patience and wait, don't sell for losses. First rule, you don't need to lose money. But remember, sometimes you have to know when to walk away. It might be right to walk away. You might have to put your hands up and say, I got it wrong, and now I'm letting it go. All right, that is our Fed, that is our inflation report this morning. That's our update. And stay right where you are on YouTube. I'm just going to end this for X because I'm going to post this as a link. So there you go. So I hope you enjoyed that. That was our inflation report this morning. Click above my head for all the links on YouTube. Down here in the description, you'll also find our $1,000 giveaway. We're giving away $1,000 in XRP, which you can sell for cash live on the show. Free to enter, free for all. I'll put that over here, and down here, something you'll enjoy. For X, you'll just find the link in the description. That's it from me. Take care of yourselves and each other.